what does a low look like? You got to be good at predicting a few points before you're good at predicting a few more. You got to be good at 3 points before you're good at 30 points. And you got to be willing to take a few swings, and you can't fall in love with a trade. The metaphor is you don't want to wake up next to her. What that means is don't fall in love with the trade. If something changes, you need to get out. Now, something in here showed us there could be a bottom. All right. And then something changed to say not so fast. And then something also then happened to show another potential bottom. So let's walk through it. The market's coming down. It's pretty weak. In this particular sequence, we broke about 30 points at this point. You get some shorts that filed in. You get a big seller of 100 lot that came in, and it quickly gets above it. And then this overall pattern looks like a head fake. It gets below the bottom of this range, dips down, tries to come up, all indicative of a bottom. And it was. But then it wasn't. So it rallies from 56 all the way up to 60 half, about a 4.5 point rally. It's a decent bounce. But somewhere in here, before it came all the way back down to here, showed that there could be a retest of the lows. Maybe that's not a low. I'll show you. Where, Anthony? Right there, where these longs come in, but then the market gets below them. There's no more shorts to facilitate more upside. These longs are trying to get out with these gray lines, and then our laser goes to green from red right in here before it broke down into here. And you get more of these longs. So these guys up in here, and then these showed that there was a probability to take back that bounce, and it does. Then we go along, we get some longs that come in to create some downside, and then bam, more shorts come in. Big seller 399 comes in. If it gets above him, it could be a little bullish. And then this iceberg is not an iceberg. I'm sorry. It's a resting sell order that gets filled right away. And so what happens? That becomes the next opportunity for the bottom or the lows to be in. This one doesn't get retested. It is the low for a while, for about 30 points of the upside. But do you see that the shorts that all came in here after it jumped a little bit? You see how the laser is red, which is showing you a lot of shorts that are stuck. If I back it up, do you see before it rallies why it could rally? Look at my cursor. Here's my cursor right now. Here's my cursor in real time, showing people when it's down in here that this market just had a big 399 lot seller. And you had this big sell order come in, and both of them were filled, showing an appetite for buying. And then you're going to see my cursor show all these shorts, laser change, upside right side. Upside right side. So don't let yourself just be married if you're fading it to give yourself one shot at the title. You're going to put too much pressure on yourself. You're going to hold on to trades and take too much heat when you didn't pick the bottom. And you have to be open and objective for when you're in a trade. You don't stop reading the market after you open a position. That's when you really got to get really involved. Keep your eye on the enemy, so to speak. But if you're not objective, which you're not supposed to be objective, all right, get out of your own head. When you're long, it's hard to be objective. Don't think it's easy. You're less likely to be objective when you have a position on, because you just told the world essentially you're long. So of course you're not going to be objective. You have to force yourself to be objective. You have to force yourself to actually see what's being shown instead of only what you want to see. But don't think it's going to come natural to you. You have to force yourself to be objective, especially when you put a position on.